for an introduction to Milltrust Agricultural Investments. I'm joined now by its Chief Investment Officer, Griff Williams, and by Milltrust International's Chief Executive, Simon Hopkins. Simon, what exactly is Milltrust Agricultural Investments?
Well, we've been involved at Milltrust with agricultural investing for a number of years, and we've been steering capital into some of the largest investments in Australia and New Zealand, including dairy, cotton, and various other assets. What we've recognized is that there is very significant demand from corporate and public pension funds for a diversified approach to investing across agriculture with a reliable source of income. And we formed Milltrust Agricultural Investments to really pursue that specific strategy.
So, Griff, tell us a little bit more detail. How do you go about doing that?
Sure. So the strategy that Simon was referring to is our buy and lease strategy, whereby we take exposure to agricultural land. Our investment universe is the Southern Hemisphere, so we're investing in Australia and New Zealand primarily, solid OECD economies, and we take a diversified approach across different farming segments. So we put together portfolios for our investors in the dairy, beef, cotton and permanent crop sectors, and then we go and we find lessees to lease the land from the fund effectively. The diversified portfolio aims to deliver consistent income returns of around 5 to 6% annually, and we would expect capital gains in the region of the same quantum and a little bit more. So overall you're looking at internal rates of return around the sort of 12 to 15% mark.
So what exactly is your role as fund manager of this portfolio?
It's a dual function really. One is to find the best land for our investors to invest in, and secondly it's to find good reliable tenants to rent that land.
And how time consuming is that?
It's incredibly time consuming. This is a very granular asset class. As you can appreciate, farmland is typically held by, still in private hands. A very large proportion of it is held in private hands. So it's a case of understanding in a very granular way the local markets, how they work, who the operators are, and achieving the exposure that we need to achieve.
And how much money do you need to have some sort of critical mass?
Not as much as you think actually. To put together a well-diversified portfolio of 6 to 7 farms, one requires around about 30 to 40 million US dollars.
And what are the main risks in a portfolio like this?
One of the key risks is tenant risk. Whilst by investing in buy and lease you are avoiding the operational business risk of a typical investment, you are still exposed a little bit to the vagaries of the commodity markets, in the sense that your tenants are exposed to that. So the important thing here is to select a tenant with a very strong balance sheet and a very long track record of riding the waves of the commodity cycles.
And when you look at your tenants, they tend to be individuals, families, corporations?
It's a bit of a mix actually. There are sort of 2 key groups. One would be corporate tenants who are in the business of operating farms but don't actually own the land themselves, and therefore we're a very interesting partner for them. Secondly, very established farming families who've been in the business for many years, and often there's a succession issue happening whereby one of the siblings wants to extract the capital from the family business. We come in, we buy the land, but the family still is able to run the operation as an ongoing concern.
Simon, you mentioned there that this is slightly different from investing in farming itself. What's the sort of difference in risk-reward characteristics between the two?
Well, I think as Griff said, the reliability of the income component, because you have a contractual entitlement to a share of the income that is generated by the farm, is a very important feature. You still participate fully in the capital uplift of owning land, and that for real asset investors is absolutely essential in this asset class. What I think is also attractive is the diversification that we've been able to secure. The world really is driven by three different aspects of farming. There's the feedstock, the growth of food that goes into livestock, that goes into poultry, that goes into fish food. There is also dairy with the huge consumption of particularly milk products by the Chinese market. And there's the consumption of other forms of protein, particularly beef, which in recent years has increased in price very substantially, largely again due to the demand from China. We've also been able to look at grapes and other diversification across the portfolios that we've been putting together, and we feel that we can give people a certain element of safety to ensure that they're not exposed to a single part of the agricultural complex.
And is the income from this inflation protected?
Yes, the leases that we typically negotiate are based on inflation adjustments relative to the CPI of the particular country that we're investing in.
And how does you go about creating the portfolio? I mean, Simon mentioned all these different elements of farming, if you like, but what other diversity do you put in there?
The first step is to work out what your investment objectives are, both in terms of income and risk, and work backwards from there. We've done that, and we've determined that a portfolio of 5, 6, 7 maximum farms in a portfolio is about right, diversified across different farming sectors, including livestock and permanent crops.
And in terms of your expertise and background, how much do you need to be an expert in numbers and fund management, and how much do you need to be an expert in farming and agriculture?
Well, I think it's very much a bit of both, actually. And it's a reason, if I may say so, it's a reasonably rare skill set to find in the market. My own background, I mean, I'm from a farm. I own a farm, a dairy farm in New Zealand, and I manage that from afar. I have the processes in place to be able to do that. So I think it's fundamental that you understand how a farm works from day one. I mean, you need to be able to ask the right questions when you're doing your due diligence. But you need to be able to construct a portfolio in a way that an institutional investor understands.
And I guess the practical side of asset management is the stewardship function that we fulfill. We will help negotiate the entry into the investment. We will ensure that we have the appropriate information, management information to share with investors on a regular basis. We will monitor the investment to ensure that there are no breaches of the contractual obligations of the operator, and then we'll manage the exit at the end of the life of the investment.
Simon, Griff mentioned institutional investors. Who's this kind of fund aimed at? Which part of their portfolio should it be in?
It's aimed at investors who have been looking across the real asset spectrum, typically investors who might put this into their real estate portfolio, potentially into their infrastructure portfolio. Agriculture is actually evolving as a significant asset class in its own right, and some of the largest pension fund managers in Europe and the United States have made very significant landmark investments into agriculture just over the last 2 years. We've also seen very significant investments made by the Chinese, and in many cases we're competing with the Chinese to secure land for food production. Their objective is somewhat more strategic, whereas ours is driven primarily by financial returns.
Is there a danger you get priced out of the market?
There is always a chance that prices will be driven up, but correspondingly we have had commodity price weakness and we've had currency weakness, and we believe that in terms of the current entry point into agricultural land, it really is a very exciting time to be putting money to work.
Griff, how do you ensure there's liquidity in the portfolio?
Well, I think it's important to remember that we are investing in very established agricultural regions when we invest for the buy and lease strategy. These regions typically consist of they're established in the sense that there are a lot of farmers in those areas, and farms are trading hands reasonably frequently. That gives us an opportunity not only to have a favourable entry point in the sense that we typically have quite a bit of choice of the land that we're looking for, but when it comes to exit, there generally is quite a large audience of ready buyers for us.
And what's the structure of this fund if you're an investor?
The structure, the way we've put this together is in the form of an Irish collective asset vehicle, which is an AIFMD compliant fund. It's a fund because it does have a definitive life. We would anticipate getting out of the fund within, as Griff said, a period of 7 to 10 years. I think this is very different to the majority of agricultural money that has come into the market, which has been with an indefinite time frame, often institutions putting money to work on a 30-year horizon. And over that time frame, it's very difficult to have any distinct return and risk characteristics that we feel are meaningful. So with investors looking for a more private equity type time frame, we've been able to structure something we think which meets those requirements.
And so when the fund comes to the end of its life, are you guaranteeing to offer a rollover vehicle?
Well, Mark, we're delighted that we've got commitments to this fund, and we hope to put the money to work and do an extremely good job, and at the end of the life of the fund we'll offer a rollover. I think this is also something that could be suited to a REIT type structure, and we'll be exploring that as well.
Griff, we're speaking at the tail end of 2015. Is it a good time to be investing in agricultural land?
We're incredibly excited to be investing at this point in the cycle and at this time, given the weakness actually that has been experienced in the agricultural commodity markets. There are a lot of ready sellers out there for land, and we are able to take advantage of that in our investment program. Secondly, the currencies within which we operate, the prime currencies of the Australia and New Zealand dollar, both of those currencies have been incredibly weak, so this is a great entry point.
Griff Williams, Simon Hopkins, thank you both very much.
Thank you.
Thank you.